First of all, I cannot understate how important this is to markets today. Whether you trade currency pairs, whether you trade gold, whether you trade the indices, we are watching, like I said, coming into the CPI event. Most markets are going to be moving pretty dramatic. Lots of gold traders here in this morning, so we will definitely be reacting to gold. That is one that I'm personally watching. Got some NASDAQ traders in here. All right, and the S&P 500 dropping below momentarily. That S&P under 5,000. NASDAQ just dropped hard. Euro, gold dropping, pound dollar dropping. Dollar index is jumping here. And look at that move. Let's have a look quickly, moving back over to Forex Factory, see what these numbers actually came out. And let's do a little bit of analysis here as we get going. Again, I want to see these numbers to see, is this move likely to continue or not? Big move on the dollar. Big move on the dollar. Remember what we just said. Dollar index sitting at support. Looks like we might have gotten what we needed. Let's see, though, if we are, in fact, there it is. Hot prints. CPI, core CPI, and CPI year over year, 3.1%. That is a higher than expected. That is a hot CPI number. And guys, this is what we've been talking about. This is going to get the market's attention, in my view. We'll see if it, the market's been so strong recently, this might still find a way to rally this afternoon. But I will say, for now, this has the stock market a little spooked. It has the dollar rallying off of support, as we were speaking about. Again, I mentioned, remember, if the inflationary number was cool, I was going to change my mind and say I was wrong, but so far, not quite the case. Looks like we might have actually been right to stay bullish USD. I've got some Euro USD shorts right now, which are probably doing okay. Let's have a look at Euro USD here. There it is, euro dollar coming into play. Love to see that. The dollar index is again playing ball here for us, holding support. Gold probably coming down. Let's see if it's actually holding those gains, though. Yeah, I mean, it's moving lower, but look at that. This is kind of a mixed candle here. Again, this would, to me, signal that we could see more downside on gold, but the key factor here is going to be actually, can we break through key levels of support? I want to look at that S&P 500. Here's the thing. Let's do really quick. We'll go USD. Okay, so S&P 500, look at that big sell-off here. And what does that put us at? That puts us at, so far, a 1.5% pullback from the highs. Is this enough of a pullback? To be honest, I think we have a little bit of room to come down to. Take a look at the S&P. It's been just trending in a straight line to the upside. However, you have something to prove here, right? You can instantly, if you're someone watching the indices, you have support and probably a lot of buyers that are lining up right away to pick up the pullback. To be honest, I'm one of them, but I would like to try and see if I can be patient enough to get the pullback that I'm looking for.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So Frank, CPI, 3.1%. What do you think about that?
Yeah, everything was higher. I kind of had a feeling yesterday. I even took a small long trade on the NAS just to see if, expectations were going to work out. I quickly got stopped out and then didn't look back to enter until we saw these numbers, just because we saw wage growth in the last report on that Friday with NFP and unemployment rate. Wage growth increased, suggesting higher inflation. We've seen higher economic numbers on various fronts before this number, all things suggesting that we're gonna run into an increase in CPI this week, which is what ended up happening. So now I think it's time to switch the narrative on gold. It broke under that trend line. I'm no longer bullish. I think this is going to test the 2000 level, that psychological level, maybe even break lower to the 1970s or 1980s. And I think it's a dollar bullish week.
Yeah, and Frank, I just was pulling up the tool while we spoke about that, and check this out. So May, now a 97% chance we do not see a rate cut in March. So it seems like March basically off the table. But what really is throwing the markets for a loop today is that now we have a 57%, let's call it, chance that we hold rates in the May meeting. So, here's the thing, Frank, is we heard, and you know this, but the Fed pointed out probably thinking like 3 rate cuts this year. And what's been really frustrating to watch is that everybody's trying to lead the Fed. Everybody's trying to say, well, if they're saying 3, it's actually going to be 7. And then it became, well, if they're saying 3, it's actually going to be 5. And this number, Frank, it starts to make 3 start to sound way more realistic, right? Because, at this point, if you get 5 rate cuts, it's probably because we're going into a recession, right? So 3, the Fed has been like really transparent throughout this process where the market keeps trying to get ahead of it. So maybe the question is, I love this analogy. I listened to somebody speaking about this. The stock market may have gotten ahead of its skis, right? So it's like skiing down the mountain. It's like ahead of its skis, like it's going to start tumbling and rolling. And so I guess, what do you think about indices right now, Frank? The Russell taking a huge drop here this morning. The NASDAQ, of course, as well. Do you think these things are pickups pretty quick, as we've seen just such a resilient market recently? Or do you think they have more room to come down as they maybe kind of sober up on the idea that rate cuts aren't coming as fast and as easy as people thought?
Yeah, I think it's time for a bigger pullback now. So I'm kind of anticipating a larger drop in this. Although you know how resilient the market is, I personally, after seeing this, don't really want to take a trade to the long side. But obviously, I'm still holding things like tech and the S&P
Sure.
and small caps for the long term. But in terms of trading, I don't think I want to, test out a long trade yet, because there's not really any fundamentals, at least this week, that are going to back it.
Sure.
Earnings are important too, and that carried us this month so far. But when you see higher CPI, that obviously is taking the cuts off the table for March. It's probably going to take it off for a while. We're going to have higher rates for longer. I don't think we're going to hike again, but I think this means higher rates for longer. And I don't know about the 3 cuts this year either.
Yeah.
What I saw was 1 cut, and it would be like I think it was like a 25 to 75 basis point cut at some point here. And that could be in December, or it could not come at all. But we'll see. As long as we see the trend of inflation come down, we just need to see the current inflation to next month. We need to see either a halt or lower levels. We just can't see it continue to climb.
Well, and Frank, I want to talk about something here that, yesterday, you and I were talking about this, I think, on the way out of the office. We were talking a little bit about how momentum seems to be really working in the markets right now, like very, very well. Like if you're somebody, maybe not gold, and ignore gold for a second, but if you are somebody who has been trading with momentum on, the indices or even the dollar index, momentum has held up very well. And what I mean by momentum is follow through moves in a lot of areas of the market, not necessarily gold. So again, I know the gold traders are like, yeah, you just got done talking about how range bound it is, but hear me out here. There's another trend here that I think is contributing to that. And it's not actually based on price action at all. It's fundamental trends are seemingly in place. And for those of you guys who have been watching the Edge Finders readings, a lot of this stuff has been dead on. Because again, what I mean by momentum is on the fundamental side is that things like inflation, labor statistics, PMI data, it's very much been kind of this consistent beat trend where we're just seeing hot everything. And if you've been somebody who's been riding that trend, it's been really, really profitable. And the Edge Finder, I think one of the cool things about it is it's masterful in momentum with fundamentals. Like when fundamentals are all sort of aligning and they keep rolling over each other and building a bigger and bigger, kind of price action trend alongside with it, that's what's led to a lot of really great moves here in the market. I mean, if you've been watching the USD pairs, they've been, actually pretty good overall. We got short Euro USD yesterday, or well, I did. I think Ivan also, I think he's in the chat. Ivan also got short Euro USD, I believe, and that move is kind of playing out. But look at these nice moves. These are fundamental trends, guys. Like technicals only may have gotten you into some of these trades, but fundamentals have been what has kept us persistently kind of, hey, everything is coming out hot right now. And until that changes, I think we stay with the momentum plan and we stay with some of the readings that the Edge Finder is giving us. So I don't know, Frank, do you see what I'm saying with fundamental momentum? Do you kind of agree with that theory? Like labor stats just hot, PMIs hot, retail sales hot, GDP hot, and now CPI hot. I mean, it's been telling us the whole way. It's been very like momentum heavy in the fundamentals.
Yeah, no, I agree. And it kind of aligns with technicals. It sort of makes that trend happen. Whereas it's not just a blind or random event where, you enter some uptrend or downtrend channel like in the euro dollar pair. These are backed by exactly what you're talking about is the, the higher inflation expectation with higher rates for longer. Start of January, we kind of eliminated we started to doubt, as I say we, as like the market as a whole started to doubt the Fed's goal to cut rates in March. So that's what brought strength back to the dollar. And then we saw healthier economic numbers, which was, had us leading to thinking, well, are we going to see higher inflation as a result? Because the jobs market's doing well, wage growth is rising, and then today we get CPI higher than expected. This is a fundamental trend causing the technicals to line up to where it makes sense to short at the top of a channel or at a resistance level when it pulls back up. So that
makes sense. And Frank, check this out. I thought there's a couple of points I want to make based on that concept, right? This momentum has been so heavy. Well, Noyar in the chat, I apologize if I said your name correctly or incorrectly, said, my studies show me that large investors were dumping NASDAQ. And if you guys have been watching the show, then you know that we talked about the COT report earlier this week. NASDAQ, they sold in the last filing, 2.5% bearish shift. And what really was interesting about the NASDAQ particular, well, first of all, it's the worst performing of the major 3 indices today. Take out the Russell, which again, I don't want to talk about it, but the of the 3 big ones, right? This one is underperforming the others. Big short contracts were added in the last COT report data. We pointed this out ahead of this. We also saw in the COT data that USD got bought ahead of this week. So kind of interesting to see that playing out here on the COT report side. And I should also mention, just while we're on the topic, remember guys, take advantage. Our 35% off sale is ending soon. The link for that, we'll drop a link in the chat. If you'd like to speak with someone on our team who can get you set up with a copy for that huge discount. Again, it saves you hundreds of dollars. If you've been thinking about getting a copy, take advantage, click this link, send us a message now. We'll get you set up with the tool so you can look at COT data and all the top setups, algorithm stuff on your own. But Frank, I wanted to point something out too. This inflationary report, I listened to someone last night, changed my perspective because I hadn't really been thinking about it. This stock market rally that we've had in the last few months, I mean, take a look at the weekly chart. He was pointing out that the inflationary number in 2023 in January was hotter than expected. Because check this out. So here's Jan 23, okay, last year. Prior to that, the stock market ran up. That caused the CPI print in January of 2023 to be hot, okay? The same pattern emerged this year. And I thought, whoa, wait a second. Jan 24, right? We had a huge pump into the end of the year and then hot inflation. And what the guy, I can't remember, it was somebody on CNBC, I was just listening to a conversation, pointed out that when you get a huge stock market rally, it is incredibly stimulating to everybody, because everybody who has 401ks and stock holdings, they just got a big bonus added to their account. And if everybody's getting a bonus and they go spend it on, vacationing and buying things and whatever, the point he was trying to make was that oftentimes a huge run in the stock market can be incredibly stimulating on its own and do some of the job of the Fed without them even needing to cut rates. What do you think about that? Isn't that kind of a fascinating point?
Yeah, I think those trends, I didn't actually know that it was the same scenario as last year. So pointing that out was kind of interesting to see. They kind of fueled themselves for this in a way.
Yeah, and again, you saw a little bit of a pump. I'm pulling it up now. It's not a massive pump, but at least from the lows, there was the low to this rally ahead of January. That was, on the NASDAQ, that was 16%. That was a huge bump from the low. So perhaps people were, I don't know, something to think about. But Frank, I'll let you go here. I know we've done a lot of commentary here this morning. Thank you for coming in, hanging out, and I'll let you move on with your day. I know we got a bunch of stuff to get done. Yeah.
One more
go
thing.
For it.
I just want to talk about oil I want to talk about oil with you and just ask you a question. My thought on oil right now could this be a bullish case? Because I guess I'll just say my thought first is that better economic numbers, we have a supply issue going on that's probably going to last through 2025, and we have hotter inflation. Say the trend of inflation continues to go up this year. What do you think about oil versus, gold or the S&P and the dollar?
No, it's a really good question, Frank. And I think, we spoke about this a little bit yesterday when we were just chatting in the office about oil. And, I'll tell you, first of all, for anybody who's listening, I have a position bullish on energy through the ETF XLE. I've been playing this one. I've sold puts on XLE. I've got the screen pulled up, Jen, if you want to show that. But XLE this is an energy ETF. This has companies like ExxonMobil. It has Chevron, CVX, right? So some of these companies that are very, they produce energy for a living. Well, I've got a position on here where I've sold puts. If I do get filled and I can build a position on energy, I'll be happy to do so. But I think you point out some really key stuff there, Frank. The economic reads have been strong. You have inflationary prints that are still showing, inflationary. What does it tell us for the oil market? Well, inflation being hot today, Frank, is like this economy is not rolling over. That you can read it that way. Like it's the demand side is strong, in terms of economic stuff. And so that strength is probably going to continue to be a bullish pressure for oil. And it's actually kind of self-fulfilling in some ways, because if that strong economy makes the price of oil go up due to demand, that contributes again to inflation, and it can potentially run into a bigger trend this year. Again, we saw a huge slide on the kind of end of the year 2023 on oil. There is some counterbalance to it. This is kind of getting in our tinfoil hats a little bit, but it is an election year. And as you can probably imagine, if you're trying to get reelected for presidency, this is not even really conspiracy, and any one of us would do it. So I'm not trying to call out the Biden administration in particular, but anybody who's president, they want to keep these oil prices down, because the last thing you want to do if you're trying to get elected for president is everybody be really upset at the gas pumps. So there is that force that could work against us. Perhaps U.S. production could increase, even beyond what we're starting to project. However, the strong economic read and the token, the back pocket card is if China comes back online. And we've talked about this together a good bit. If China comes back online, and you see the Chinese stock market rebound, as we've started to kind of point out in some of the videos recently, if you get that, Chinese economy is a huge demander of crude oil. And if their economy is doing well, they're going to demand a lot more of it. So I do actually think that the bull case for oil this year, despite it being an election year, looks pretty good. I mean, you've got a pretty, what I think could be relatively cheap oil, but we'll see, Frank. What do you agree? Do you disagree? Do you have any positions on it?
Well, I know that you were long China stocks. I believe it was FXI. Is it
Yep.
the symbol for it on WeBull? I do agree. If China does come back, then that's more. That's going to be a huge increase in demand for oil because you're going to have more output, more jobs, more people at work. So that will be a huge factor into this. And I was just looking at it from a U.S. perspective. But yeah. I do agree. I think after seeing today's number and then with the accumulation of all the other numbers we've seen so far this year, I'm probably going to look at another long position on oil. I've been trading it to the upside, and I feel like this trend is going to continue. So, yeah.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.